What is up, everybody? I am nobody special. Happy Friday. It is that time again. It's time for Power Hour. We're going to wrap up the week. What a wonderful, outstanding week it was. I guess I can't back that up. It wasn't outstanding, but it was a good week. It wasn't a bad week. These days, good weeks, well, we'll take it. Hope you guys are all doing well. I want to thank you for stagflating here with me on a Friday afternoon. That's going to be the theme today. We are going to stagflate today because that is the economy that we have, folks. We are in a state of stagflation, the wonderful economic state where everything gets more expensive even though we make less money. Isn't that great? Don't we have that to look forward to? That's awesome. Real quick, on a personal note, I have to say, hold on, I'm going to turn this off. Mess with my lighting back there. Rookie mistake. Sorry, guys. On a personal note, I have to say I was absolutely beaming with pride yesterday. I took my daughters to a trunk or treat at their school, and they got to wear their costumes. My youngest daughter, she dressed up as Snow White. She looks beautiful in her little Snow White dress. And, you know, we pull up and she says hello to one of her teachers. It was this trunk or treat thing going on at the school. She says, "Look at me. Do you like my dress?" And everyone says, "Oh, you look beautiful. I love your dress." And she says, "Yeah, got it at the thrift shop. We got a great deal." Brought a tear to my eye. One of my proudest moments as a dad. A little bit embarrassing, but at the same time, that's my girl. Cheap AF. Just like her old man. "Yeah, we got it at the thrift shop. We got a great deal." Hey, man, in these stagflationary days, we got to save money where we can, right? And the good news is that the price of somebody else's Halloween costume from a few years ago has not really gone up that much yet. So inflation hasn't hit the thrift shops yet. So we got that going for us, which is good. Also, on a personal note, I want to say welcome to all the new followers on this channel, all the new viewers who came over from the Economic Ninja video. I don't know if you caught that, but I did a guest spot on the Economic Ninja over the weekend talking about my theory about how the Evergrande and the Chinese real estate collapse is going to lead in a reduction of the global silver supply. And I got a nice bump in subscribers to my channel out of that video. A lot of new people here. So I want to welcome you guys. Thank you for coming over. And I hope I can make it worth your time. And with that, I think it is that time to shrink my big fat melon of a head, you melon heads. And what has happened to my window capture? There we go. Again, man, with the rookie mistakes today, rookie live stream mistakes. I apologize, folks. So, what did we have this week? Well, we had a decent week for the S&P 500. Looks like we picked up about 400 points. All things considered, I think that's a pretty good week. Again, I talked about this in my video yesterday. You know, we got lousy economic data this week, 2% GDP growth. I mean, with all the stimmies and everything, that's just pitiful. With the accommodative Fed policy that we have going on in the economy right now, to get 2% GDP growth with such a dovish Fed is just abysmal. It's terrible. The economy should be growing at 5 or 6% right now, and it's not. So that's just more proof that we are stagflating. The Wi-Fi password of the day. So the S&P had a pretty good week. The Dow didn't fare quite as well. Looks like the Dow, maybe picked up 100 points over the week. Not a great week for the Dow, but not a bad week. The NASDAQ, surprising me, I don't know if you caught my video over the weekend, but I could have swore we were in for a bad week for tech stocks with the supply chain and my theory that that advertisers were not spending as much money because of the supply chain issues. There's just no inventory, so why pay to advertise it? And I thought the tech stocks were going to get crushed this week, but I got to eat some humble pie here. I guess I was not right about that one because the NASDAQ picked up, looks like almost 400 points this week. Real quick, let's check. Let's check Facebook, a.k.a. Meta. The new company, Meta, is their name. Okay, so it looks like Meta is down a couple of bucks this week. So they reported their earnings on Monday, and it looks like they didn't respond too well to the earnings. I don't know if you guys knew, but Facebook announced that they're changing their name. They're going to be Meta from now on. I, I I don't have an opinion on the subject. Everybody's going to call it Facebook, right? Like, does anybody ever really use the word alphabet when describing Google? It's still Google, right? Everyone talks about, oh yeah, I own stock in Google. People almost never say I own stock in Alphabet. Only like on CNBC where they'll say Google parent company Alphabet because they know nobody says Alphabet. Just like I don't think anybody's going to say Meta. I think everyone's going to keep calling it Facebook. Let's see. Twitter was another one I had suspected was going to get hurt this week. Looking at a 5-day chart, yep, Twitter fell off a cliff from 60 down at 53, and then the other one was Alphabet, aka Google. And looking at a 5-day chart, okay, so Google earnings were pretty good. So 2 out of 3, I got right on that one. So I guess it wasn't as bad a call as I thought it might be. So with that, I'm going to check out a couple of comments from you guys. That's not embarrassing. That's awesome. Thank you, Zeeble Fritz. I agree. It was awesome. My daughter's such a cute kid. She's so rock and roll, she doesn't even know it. Who else we got here? What's going on, Mike from Robin RC Models? I think there are a lot of things that can be bought over the next time for very few monies, like machinery in China. Something I can't say because I don't want to get censored. And booze will surely moon. I agree. Speaking of, one of my holdings is Tilray. Speaking of things you said we're going to move, let's see what Tilray's up to. Hasn't really had that good of a week. No, they're down. That's one of the ones that I've been selling covered calls against my shares in Tilray, secretly hoping that they get exercised and I can sell those. Okay, with that, we are going to shrink the melon again, and we're going to get into some of these stories. Real quick, we're going to touch on the inflation story, because I have inflation notches a fresh 30-year high as measured by the Fed's favorite gauge, and that is the personal consumption expenditures, I believe is what PCE stands for, which is the Fed's favorite inflation index. And according to PCE, inflation is at a 30-year high, which most of us already know that. Headline inflation, including food and energy, rose 4.4% at an annual rate in September. That's the fastest since 1991. Core inflation, which strips out food and energy for some reason, increased 3.6 for the 12 months, the same in August, but still also the fastest pace in 30 years. Now, this line I thought was interesting. Personal income declined at a faster pace than expected while consumer spending increased and was in line with forecasts. Now, I did a double take when I saw that one, talking about personal income going down. How is that possible with all the inflationary wage pressures going on and the job shortages? What that is, personal income is going down because the stimmies have stopped going out. And that was the single biggest contributor to the increase in income last year, was government handouts, stimulus checks, expanded unemployment benefits, you name it. And as all those programs have gone away, personal income has declined. Now you'll see that wages actually went up, just not all that much. Employment costs rose more than expected at the fastest annual pace in 19 years. And there's a couple things I wanted to touch on down here. Compensation costs also climbed, rising 1.3% in the third quarter, ahead of the 0.9% estimate the Labor Department reported. That brought the year-over-year increase to 3.7%, slightly higher than the Q1 and the fastest acceleration since the second quarter of 2002. Wages and salaries rose 4.6%, compared with 2.7% from September 2020. Now, that is the number right there. Wages and salaries rose 4.6%, according to this story, while PCE rose 4.4%. So this is the first case this year of wage increases keeping pace with inflation. However, I have to say this is the official inflation number, and I don't think the official inflation number is really that accurate. As I've talked about before, it under-stresses the importance of rent and shelter, which is increasing at just an astronomical pace right now. So I'm not really buying that 8.4% number. I think the government way understates the inflation story. And now I just want to mention also this inflation number, the highest in 30 years, this comes along with a 2% GDP growth. And here in this chart is showing GDP growth by quarter going back to 2019. And again, you can see here down at 2%. That is the slowest pace since the pandemic began. Now you see that big drop and that big spike up. That was the initial rush of the lockdown and economic activity just grinding to a halt. And then when it all came back, there was that big surge again, and that's all the stimulus money and trillions being dumped into the economy. And now we're kind of left here in the doldrums. I think we're probably looking at a recession. I did a video on this yesterday. I mean, if we're down to 2% economic growth right now with the dovish Fed policy that we have and all the hawkish changes that are expected, because we've got taper on the horizon, we've got rate hikes on the horizon, we've got bond yields are rising, money is getting more expensive, things are getting more expensive. I think we're looking at negative economic growth, possibly in the fourth quarter, certainly the first quarter of next year. And again, as I mentioned in my video yesterday, the definition of a recession is 2 consecutive quarters of negative economic growth. So we could officially enter a recession as early as March of next year. Or we could be in one now, but they won't actually declare it until March of next year. Okay. Whoa, that's so meta. Thanks, Ebel Fritz. That's funny. What's up with silver, Lynn William? I haven't looked at silver today. Let's see what is up with silver right now. Bring up the metals futures. Oh, looks like we broke below 24. Oh boy. Now let's close these ads here. I don't like looking at line charts. I like candles. There we go. Look at a 1 month. All right, so it looks like a little consolidation after that rise into the mid-24s. Technically, I don't really see anything too significant going on, although we definitely did reject that little breakdown lower here, and we're moving back up higher now. So I guess let me just preface with silver. I tend to dollar cost average in. I make regular purchases of physical silver, very small amounts, and I don't worry too much about price. I just average in because, I got my clock clean this year trying to time the silver market. Let's put it that way. And I got too fancy with derivatives, and it just didn't go well for me. The market's too unpredictable with the bullion bank price smashes and everything else. So I've just been dollar cost averaging into silver. But Lynn, that is a good segue. And no, I am definitely not selling my silver. Let me put it that way. Sorry, I saw your other comment. Zebel Fritz says, you can sell silver with a question mark. That was pretty good. I've been talking, again, I mentioned to some of you guys that I went on the Economic Ninjas channel to talk about the my theory that the silver supply is going to start contracting because of the slowdown in building. And I just want to show a couple of articles here that I found. Make sure you guys can see here. You can. Global steel demand to return to pre-pandemic levels in 2021, except in China. Now, I'm mentioning steel demand because one of the primary sources of silver is in zinc mines. And the main use of zinc is for galvanizing steel. All right, so a major reduction in the use of steel in China will cause a reduction in the demand for zinc, which could cause zinc mines to shut down, which would result in less silver being dug up out of the ground. Less silver supply, prices go higher. Just want to read a little bit off of this because I see this thesis playing out over a year or two. All right, this is not a short-term thesis. I don't think the effect on the silver supply from the Chinese housing collapse, it's going to take at least a year to develop, possibly more. So keep that in mind. This isn't a short-term thing, but I think it's going to be significant. And where was it? Here. Demand in China dropped 13.3% in July and 18.3% in August because of the slowing momentum in the real estate sector and the government cap on steel production. Activity also weakened owing to tough government measures on developers' financing that were introduced in 2020. Chinese steel demand will have negative growth for the rest of 2021. And that's saying exactly what I've been saying, that the Housing collapse in China is going to cause a reduction in steel demand. Okay, and if steel demand goes down, that means zinc demand goes down with it. So keep that in mind. Now, on the other hand, you've got copper. Now, zinc, lead, and copper combine for somewhere around 60% of all the silver that comes out of the ground. And I saw this article also that says copper to extend slump in 2022 as miners ramp up and China weakens. Now, I want to emphasize this is talking about copper prices, okay? And the first thing you have to say is mines ramping up. So that means more copper supply is coming out of the ground in 2022. Now, that feeds into my thesis that the market is going to be oversupplied, and that will eventually result in a reduction of the mines that are running and a contraction in the copper markets. But that's going to take time. That's why I'm saying this is like a 1 or a 2 year story that's going to play out over time. I just want to read you a little bit out of this article. Copper prices are due to extend their decline next year from record levels touched in 2021 as mine supply ramps up and economic growth tapers in top market China, a Reuters poll found out. Benchmark copper soared to a record peak of $10,747 a ton in May, but has retreated 10% since then, weighed down by weak Chinese factory output, debt problems in the property market, and the energy crunch. So there you have it again. Copper prices headed lower because of a reduction in demand from China. Now, again, this article talked about copper supply expanding next year because there's more mines coming online. We'll see if a reduction in copper price has that same effect. And real quick, while we're on the China subject, I just want to mention a couple of things. I did a video about this earlier today, so I'm not going to spend a lot of time here. Evergrande made their coupon payment on Friday. They were down to a couple of hours left before their 30-day grace period for their missed bond payment expired. They made that payment in the middle of the night, and it looks like the money may have come from the company's chairman because the Chinese government basically ordered him to pay these bond costs out of pocket with his personal wealth. So not a good time to be an Evergrande executive in China right now. And also on the China story, I saw this one, and this is certainly not going to help with our supply chain problems. China rations diesel amid fuel shortages. Petrol stations in many parts of China have begun rationing diesel amid rising costs and falling supplies. Some truck drivers are having to wait entire days to refuel, according to posts on social media site Weibo. China is currently in the midst of a massive power crunch as coal and natural gas shortages have closed factories and left homes without power. All right, so no diesel in China or less diesel in China. That means the trucks in China are not running. That means more growth or more slowing in China's economy. And that also means supply chain problems get worse. And I've been talking about this for a couple of weeks now, how the problems in the supply chain are just moving further and further upstream, where they started here in the States offloading the boats and getting the truckers, and now they've moved all the way over to China, where China can't load the boats fast enough. Now their trucks aren't running, and they don't have enough power to run their factories, and they don't have enough power to run their base metal manufacturers. Right? All the problems moving upstream in the supply chain, and that trend is continuing with this story. All right. Coming back here, Don T77, sir, thank you very much for the super chat, for supporting the channel. Some Bitcoin ETFs will be used to control the price of Bitcoin, like gold and silver contracts. Another, the price of Bitcoin cannot be manipulated because all tokens, I guess is what you're saying, are stored on a blockchain. Thoughts? Okay. Yes, any ETF that invests in the actual underlying Bitcoin commodity can affect the price of Bitcoin and therefore can be used to suppress the price of Bitcoin. Anybody who's been following silver this year can see exactly that, right? I mean, case in point, take the SLV ETF, right? They're the biggest owner of physical silver in the world, and yet it's a mechanism for suppressing silver demand because JP Morgan is the custodian of SLV, and JP Morgan is also the biggest owner of silver. So during times of peak demand for silver, right, people buy the SLV ETF. The SLV ETF goes onto the market and buys more silver, while JP Morgan sells their silver to the ETF that they manage. They go into their vaults and they just change the name tag on the silver. No physical silver ever moves. It just goes from JP Morgan's label to SLV label. Then JP Morgan goes and they paper dump 1 million tons of silver onto the open market, smashing the price down. Now people sell out of the SLV ETF. And because people are selling out of the SLV ETF, the ETF sells some of their silver. And JP Morgan comes in and says, no problem, we'll buy it back at a lower price. And again, they go into the vault and they change the tags from SLV back to JP Morgan. The net result is the investors in SLV lost money. JP Morgan made money by manipulating the price of silver. And I can definitely see how a Bitcoin ETF could eventually, with that asterisk, eventually have that same effect. All right, that's why I'm not crazy about a Bitcoin ETF. All right, my favorite draw, one of the things that draws me most to Bitcoin, is its decentralized nature. The fact that these few crooks can't control it the way they control this traditional finance system. But there are already whales and players in the Bitcoin space that can have this effect. Case in point, Tether, right? If the story breaks tomorrow that Tether is in fact not backed one for one, as a lot of us speculate they aren't, or that they're holding this crap Chinese commercial paper that's really only worth 25 cents on the dollar versus what Tether claims it's worth. If Tether loses its peg to the dollar, you could see a run on Bitcoin, and you could see that the price just absolutely fall out from underneath it, right? Bitcoin could shed 50% overnight if that happens. And anybody who invests in crypto needs to understand that story is still out there, and that could happen at any minute. Now, that said, Bitcoin could go up another $100,000 from here before that happens, in which case a $50,000 sell-off would still be significantly higher than where we are right now. So I don't try to time Bitcoin. I just dollar cost average in a little bit at a time every week. I don't look at price. It's a super long-term play. I'm in it for 10 years plus because I really do think Bitcoin will be over $1 million by the end of this decade. Even if the Tether story breaks, I could still see it going to $1 million by 2030. There's 2 halving schedules. I won't get into the details of the halving schedules, but every time there's been a halving in the past, there's been a major run in Bitcoin price. So now the other thing with the ETF and why it might eventually be able to affect the price of Bitcoin is there's really so little Bitcoin that is available on the open market right now. I mean, almost 80% of all the Bitcoin that's ever been mined into existence has been sitting in the same wallet for more than a year. It doesn't move, which means it's off the market. The actual liquidity pool in the Bitcoin market is very small. It's only about 20% of the Bitcoin in existence, which I think is like 3 or 4 million Bitcoin. So for an ETF to accumulate enough Bitcoin where they'd be able to have the firepower to do what, say, JP Morgan does with an SLV, just the act of them acquiring that much Bitcoin is going to drive the price of Bitcoin up so much higher that the net effect, at least in the short term, will be very bullish for Bitcoin. Do you see where I'm going with this, Don? If they try to buy enough Bitcoin to get to the point where they could manipulate and suppress the price, just the act of getting there is going to drive Bitcoin into the hundreds of thousands because the amount of liquidity, the amount of Bitcoin that's available for sale is just way too low. Now, as they start accumulating and as the price runs up, some of that 80% of Bitcoin that's been sitting in wallets for more than a year will be drawn back into the market as people take profits. But still, just the act of an ETF trying to buy up that much Bitcoin is going to be majorly bullish in the short term, although my personal opinion, it's not very healthy for the platform in the long term. Sorry, I hope I answered your question, Don. And thank you very much for the super chat, sir. Again, I appreciate you supporting the channel like that. Reading on a little bit, with student loans starting up in January, my silver buying is going to suffer. Well, Waves, understand, student loans, unfortunately, is something a lot of millennials are struggling with. We do what we must, right? It's the cost of doing business these days. Going to probably be selling some crypto for more PMs. Zeeble Fritz, that's not a terrible idea, especially with the run crypto's had, locking in some of those gains and then preserving that wealth in the form of precious metals. I don't think Bitcoin is quite done running in the short term, to be honest with you. But nobody ever got hurt taking a profit, right? So, also, why don't we all just FOMO into Shiba Inu? Screw it, man. We're trying too hard here. All these charts and all this fancy research and due diligence, let's just FOMO into Shiba, man. Throw all our money in this joke derivative joke. What is it's a joke coin derived from another joke coin. So it's a joke coin derivative. It's in the billions. Have you guys heard this story? There's a wallet out there. Some guy bought $8,000 worth of Shiba Inu, I guess a year or two ago, and that $8,000 is now worth $5.7 billion. Well, guess what, buddy? You're not getting your $5.7 billion because everybody's watching your wallet now. And whoever you are that owns that $5.7 billion in Shiba, if you go to sell any of it, you're going to cause such a stampede for the exits in Shiba Inu that your $5.7 billion is going to evaporate before your very eyes. Be lucky to get a few $100 million out of there. Still fantastic gains. Congratulations. But folks, please, I have to see why my A here. This is sarcasm. Do not FOMO into Shiba Inu. It is garbage. It is junk. It's going back down. Like all these altcoins, it's going to crash. It's happened so many times before. It happened with Doge. It's coming, right? It's a joke. It's a copy of it. It's not even an original joke. It's an unoriginal joke, and it's whatever. Some people are making money on it. Congratulations. Not a bad time to take some profits, though. All right, what do we have? There are a lot of tags on that silver. Yes, there are, Dennis. What about crypto fund in a Roth IRA? Jeff Gamble. Any resemblance there? I wonder. I have heard of I Trust Capital about putting crypto into an IRA. The nice thing about doing it in a Roth is your gains are tax-free. So you're putting in after-tax money now, and if, like me, you think cryptocurrency is going to continue this run for the next 10 years, say Bitcoin does go from 60,000 all the way to $1 million, if you own that through an IRA or a Roth IRA, that $940,000 in gains per Bitcoin is all tax-free gains. So that is immensely profitable. So it's a little difficult to pull off. It's complicated to hold Bitcoin through a Roth IRA. You have to have a custodian that holds the Bitcoin for you. So in true Bitcoin fashion, there is some counterparty risk involved in there because someone else holds it, right? You don't have your private keys, not your Bitcoin. That's what a lot of Bitcoin owners say. That being said, the prospect of such big gains being tax free is certainly you're getting some trade off for that risk that you're taking there. So I don't think that's a terrible idea. I personally don't do it. I just own my Bitcoin outright. I don't have anything going on with my IRA or my 401k, but it is an option and it's worth looking into. You don't want to have any funds in the banks, Patrick Gelpke, did I say right? Or Gelp? I apologize if I butchered your name. I'm not a big fan of the banks. Unfortunately, I don't really, I'm somewhat insulated. I have my precious metals. I have my crypto assets. But if the banking system were to go under, I'm still very much exposed to it. And, the only option is to keep everything under your mattress or in your house. And then you got a whole new world of problems waiting for you if you do that, folks, right? Unless you're ready to fight for it. I wonder if XRP will do anything after the SEC case. I would like to think so, says Waves. Waves, I agree. I haven't been following the XRP SEC case very closely. Again, my crypto, I limit it to Bitcoin and to Ethereum. So I'm not going to buy Ripple for myself one way or another. But if you are in XRP, if the SEC case gets dismissed, which I've seen some indicators that it might get dismissed, XRP is going to run. I don't know how much it's going to run, and it'll probably sell off after it runs, but it would definitely be bullish for it. And I've seen some stories where it looked like the judge was getting awfully frustrated with the SEC and the prosecution in that case. So it just by the tone of voice that's been going on in the hearings, I don't think things are going well for the SEC in that case. Robin RC Models, sir, thank you very much for the super chat, for supporting the channel. I appreciate it, sir. I wonder how fast the transition to cryptocurrencies will take and the way politics work will likely change alongside. So I wonder that myself, Mike, because the more, and we're going to get into some of this a little later because the government is becoming so entwined in the financial system, and they're grabbing at power more so than they have in a long time, right? I see the government trying to take power for itself, especially in terms of finance, like never before. This $600 reportability requirement. I mean, that just blew my mind. Just making $600 reportable to the IRS. They have dropped that from this most recent package, so that's good. They will go after crypto. I mean, you're already seeing it with the unrealized capital gains tax that they're trying to get, right? They're going after the Bitcoin billionaires. They're trying to force them to sell it, so probably so they can buy it. Force them to sell it, force them to pay taxes on it, which, unrealized capital gains, give me a break, you're going to tax that. I saw a guy on Twitter who wrote that I have a steak in my freezer that's up 20% since I bought it. What do I do? That's an unrealized capital gain, isn't it? But when the government causes inflation and causes devaluation of their fiat currency, which causes the nominal value of other assets to go up, and then the government says, you owe us unrealized capital gains taxes on those nominal increases in your assets, even though your personal wealth has not gone up at all, only the dollars that it's denominated in has gone down. Now you're forced to sell assets to pay some of that value back to the government. That is confiscation of wealth, folks. That's what that is. That is wholesale government confiscation of wealth. And it's incentivizing the government to inflate away the currency further, because when the government causes inflation, they're giving themselves a raise by forcing you to sell assets and give that money back to the government. So it is a very, very sinister tax that is being proposed, this combination of inflation with unrealized capital gains. I mean, it is devious, to say the least. If it's on purpose, it's evil. If it's not on purpose, it's stupidity. So take your pick. They're either stupid or evil, what they're proposing. But anyways, I'm getting too political. Also, Mike Robin, the one thing they're going to do is they're going to go after the exchanges. They can't stop Bitcoin, right? It's out there, it's distributed, right? They can't stop it. What they can do, though, is they can take away the off-ramps and the on-ramps, and that's the exchanges. That's where the Bitcoin world interacts with the fiat currency. And if they take away the exchanges, or if they regulate the exchanges to such a point where it becomes untenable for the average investor, then they're basically taking it away from us, because at some point people will still need to make their mortgage payments. I doubt you'll ever be able to make your mortgage payment in Bitcoin, at least not anytime soon. And if you do, it's a good bet the mortgage companies are going to be all kinds of mixed up with the IRS, and it's not really going to be a way. It's not really going to be separate from their system. So they'll go after the exchanges. They can't stop Bitcoin itself, but they can make it difficult through the exchanges. That's how I think the politicians and the money grabbers in the government, that's how they'll come at us. They'll go for the exchanges first. Anyways, let's shrink my melon head again, because that was a pretty good segue, and we're going to tread dangerously close to violating my rule about no politics on this channel today, because I saw something that I'll just say it scared me. I mean, there it is. I don't scare too easy. Like, I've done some crazy stuff in my life. I still do. This one scared me, folks. I'm not going to lie. This I'm going to devote a lot of time to this one, because shout out to Mr. Brian Zarb on Twitter, who sent this to me. He wrote, "I rarely tweet this stuff, but this is getting serious." And he tagged myself, Economic Ninja, George Gammon, and a few others. And this was in relation to a chart from Steve Penny, the silver chartist, which, if you don't know who Steve Penny is, very smart guy. You've probably seen him on some of the other channels if you're watching me, so you probably have heard of Steve Penny already. But he's saying the proposals in this nominee's white paper are especially disturbing and highlight the need to own physical silver and gold stored outside of the banking system. And this kind of goes into, I forget who made the comment earlier, Patrick, about taking your money out of the banks, because, oh my God, when I read this, my first reaction was, this can't be true. This has to be one of those things off of a conspiracy theory website. Like, it seemed like it was fake. I couldn't quite believe it, but here it is. And it's talking about this woman, Saule Omarova. And it says, this month, Vanderbilt Law Review published a 69-page paper by Saule Omarova, President Biden's nominee to head the Office of Comptroller of the Currency, the federal regulator of the largest banks in the country that operate across state lines. The paper is titled, The People's Ledger, How to Democratize Money and Finance the Economy. And it talks about a couple of things in here, some of the serious points in the paper. Moving all commercial bank deposits from commercial banks to so-called Fed accounts at the Federal Reserve. And right away I'm thinking, no way. Nobody would outright propose this. This has to be conspiracy theorist nonsense. Allowing the Fed in extreme and rare circumstances, when the Fed is unable to control inflation by raising interest rates, to confiscate deposits from these Fed accounts in order to tighten monetary policy. Again, no way. This can't be real. And allowing the Wall Street conflicted federal bank allowing the most Wall Street conflicted Fed bank in the country, the New York Fed, when there are rises in market value at rates suggested of a bubble, such as with technology stocks, to short these securities, thereby putting downward pressure on their prices. Come on, the Fed getting in the business of shorting stocks? No way. No way. Eliminate the FDIC. Well, if they're talking about bringing all the private banks into the Fed, well, yeah, you don't need the FDIC anymore. Consolidate all bank regulatory functions at the OCC, the department she's being proposed to head. So what this woman is talking about, if this is true, is a total takeover of the banking system, and therefore a total takeover of finance as we know it by the government. And yeah, I realize that the Federal Reserve is technically a private entity, but you know what? They're appointed by the government. It's the government. So when I read this, I thought, no way, this can't be real, right? I'm like, this is conspiracy theorist nonsense. No way. But I do value the input from my readers and my viewers. So I was like, all right, let's pull the string on this. Let's read up a little bit on this Saule Omarova woman. And here's what I got from her Wikipedia page. Saule Omarova is a Kazakh-American attorney, academic, and public policy advisor who was nominated to serve as controller of the currency by President Joe Biden, a Kazakh-American. Well, here's the funny thing. When she was born, Kazakhstan was part of the Soviet Union. So I think this has been selectively edited to say she's no longer a Soviet American attorney. Now she is a Kazakh American attorney. Omarova is currently a law professor at Cornell Law School, where her work focuses on financial regulation and corporate governance. She's previously served as an advisor within the Department of the Treasury. And then here's where it got a little weird for me. Omarova won the Lenin Award at Moscow State University before the collapse of the Soviet Union. And when I saw that, the hair on my neck started to stick up. The person who is being put in charge as controller of the currency, one of the top banking regulators in the country. Now, she has not been confirmed by the Senate, but she won the Lenin Award from Moscow State University in the former Soviet Union. They don't give the Lenin Award to many free market capitalists, okay? So when I read this, I started to get a little bit worried. Oh boy, okay, so she comes from the former Soviet Union. She came here in 1991, which is like 2 years after the Soviet Union collapsed. And she won the Lenin Award. Okay, now I'm getting worried. So I read on a little bit more. And where was the part that really got to me? Okay. Omarova graduated from Moscow State University in 1989 on the Lenin Personal Academic Scholarship. Her thesis from Moscow State University is titled Karl Marx, Economic Analysis and the Theory of Revolution in the Capital. This does not sound like a free market capitalist. This does not sound like someone who believes in individual liberty and personal accountability and responsibility. Her graduating thesis was titled Karl Marx's Economic Analysis and the Theory of Revolution in the Capital. Coincidentally, the text of this thesis has disappeared. The people who are confirming her or who are supposed to vote on her confirmation are trying to read her senior thesis from Moscow State University. They've been unable to get a copy of it. But if the following document is any indicator, then they don't need a copy of it. Because I got into this document, and this is the actual article in question. The article that was tweeted by Steve Penny and Mr. Bryan. I went directly to the source, Vanderbilt Law Review, and here it is. The People's Ledger, How to Democratize Money and Finance in the Economy. Now, folks, there's a running joke in communist circles is that when you're taking freedom and liberty away from people, the first thing you do is you say it's for the people, right? The People's Bank of China, the People's Republic of China, the Democratic People's Republic of North Korea. If they have to call it the People's, the reason they do is because it sure as hell doesn't belong to the people. So right away, the title of her article starts with the People's Ledger. And I got alarm bells going on. This is saying in the back of me, this is commie crap, is what's saying. This is communist garbage. And when you read on, it's exactly what this is. And I want you to keep in mind, this person is being put in charge of the controller of the currencies office. This is the government regulator that's responsible for Operation Choke Point, which was this government movement in the Obama administration where they cut off access to the banking system to anybody they deemed undesirable, such as firearm manufacturers, payday lenders, even adult film stars, right? If they deemed these people to be socially undesirable, the Office of the Controller of the Currency cut them off from the banking system. Basically froze their accounts just because they didn't like what these people did for a living. These were perfectly legal enterprises, right? Not against the law. Actually, a lot of them are actually very strictly regulated with a lot of compliance costs associated with them. And your reward, if you jump through all those hoops that the government placed in front of you and you got your licenses and you did it, was they just went through the back door and they denied you access to finance. They took away your bank accounts. That is exactly what they did under this Operation Choke Point. And it was this department of the controller of the currency that did it. The department that this woman, Saule Omarova, is being proposed to head up. So right away, the department she's proposed to run has some very shady history. And I just want to read you a couple of the highlights of this article. And again, folks, this scared me. All right. Focusing on the U.S. Federal Reserve System, this article outlines a series of structural reforms that would radically redefine the role of a central bank as the ultimate public platform for generating, modulating, and allocating financial resources in a democratic economy, the People's Ledger. So they want to transform the central bank to be the ultimate platform for generating, modulating, and allocating financial resources. This is a government takeover of all the money. That's what it is. Right there, they're saying it in fancy wording, making the central bank the ultimate authority for allocating financial resources. The People's Ledger. Folks, this is some commie garbage, and it gets better. I have some notes here. Bear with me. On the liability side, the article envisions the ultimate end state whereby central bank accounts fully replace, rather than compete with, private bank deposits, making the... So, right here, central bank accounts fully replace rather than compete with private bank deposits. That means your checking, your savings accounts, your bank accounts all go over to the Federal Reserve. And they get put under the express jurisdiction of a former Lenin Award winner. What could possibly go wrong? But it gets better. As part of this exploratory exercise, the article proposes a mechanism for modulating the aggregate supply of money via direct crediting and, in rare circumstances, debiting of universally held Fed accounts. So what they're saying here is the Federal Reserve will be able to put money into your bank account and take it out as a mechanism for modulating the aggregate supply of money via direct crediting and debiting. So what they're going to do is when they print helicopter money, they will just dump it directly into your Federal Reserve account. But when inflation gets out of control, when the government decides they want to fight inflation, instead of just raising interest rates, they're just going to go into your account and take your money. She's saying it right there. And in rare circumstances, debiting of universally held Fed accounts. They will go right into your account and take your money to fight inflation. Keep in mind, they won't stop printing. Saying nothing about that. They will print money to fund whatever social services and programs and pet projects they want. But to make sure inflation doesn't get out of control, they're just going to take money from you while they keep printing and dumping it into the system. This is scary, folks. This is the person being proposed. This is her words, her article published this month. Okay. I have to go on. It's painful for me to read. This is some seriously, I worry about this stuff, folks. OMO plus assets, okay? What they're talking about is open market trading operations plus. The third principal asset category on the Fed's balance sheet will consist of a diversified portfolio of financial instruments acquired through the Fed's expanded open market trading operations, or OMO plus. If a particular asset class, such as mortgage-backed securities or technology stocks, rises in market value at rates suggestive of a bubble trend, then the Federal Reserve Bank of New York trading desk will short these securities. So not only are they taking your checking and they're taking your savings, but if these government-appointed bureaucrats decide that your stocks are worth too much, they're going to use your money to short your stocks. That's what they're talking about doing. Giving the government authority to short technology stocks. Right there in plain English. That's what she's proposing. Now, I want to keep in mind, everything she's talking about doing here would require major legislative act. It would require congressional and Senate and the president to sign it into law. Okay, so this is not all going to happen overnight if this woman gets confirmed. But these are her ideas. This is what she envisions as her unifying vision for democratizing finance, whatever the hell that means. My goodness. Allowing the Federal Reserve Bank of New York to short technology stocks if they deem it to be a bubble. Can you imagine your investments, your hard-earned money, you put it into a stock and it starts to do well, only to learn that the government is shorting your stock? The government is with their infinite resources, is betting against you? Give me a break, folks. And jumping around because her ideas keep getting better. Oh, I lost my place. Bear with me. This is a very long document, and I have my footnotes. Here we go. Implementing a contractionary monetary policy, i.e. deflation, by debiting Fed accounts, in turn presents a different set of, here's some fancy Latin, ex ante institutional choices aiming to minimize the economic and political fallout from what is likely to be perceived as the government taking away people's money. So she's worried about people's opinions when she's flat out said, in order to fight inflation, they will go into your account and take money out. And now she's saying, oh, this brings a whole host of different problems because people might get upset if we go into their accounts and take their money. You think? You think that might upset some people? And lastly, I got to read you the last bit. To maximize the allocative impact of NDW facility. NDW is their private lending facility because keep in mind, the Fed, if they take over all banking, they're also taking over all lending. To maximize the allocative impact of the NDW facility, the Fed could supplement its traditional credit quality criteria, i.e. your credit score to determine your credit worthiness for these eligible collateral by explicitly preferencing certain categories of assets, such as, for example, loans to small and medium-sized non-financial enterprises and minority-owned businesses, right? Because now the Federal Reserve is going to determine your creditworthiness based on the color of your skin or your ethnicity, student loans, or credit supporting development in undeserved communities, bonds issued by firms in certain sectors of the economy. So they're saying the central bank is going to be put in charge of lending, and they're going to prioritize based on ethnicity, based on their priorities, and excluding others, such as, for example, margin loans, private equity, bridge loans, highly engineered asset-backed securities. Furthermore, the Fed could make carefully targeted adjustments to its collateral eligibility criteria for the specific purpose of temporarily increasing or decreasing the amount of private credit flowing into particular segments of the economy. While building on the current discount window practice, these new standards would allow for a more granular pursuit of a broader policy agenda. Remember, these are the people that took away your bank account if you worked in a legal field that they didn't like what you did for a living. For example, if you worked in the firearms industry or the adult film industry or the payday loan facility, right? Obviously, these are emotionally charged topics and whatever your opinion on, but these are legal industries, and this organization just decided they didn't like them, so they decided to cut them off from the financial system. And these are the ideas of the person who's going to be put in charge of that organization. So, I don't know if I got a little tinfoil hatty there, folks, but you could probably tell like my skin was turning red as I was reading this. This person must never be put in a position of authority in the United States financial system. There, I said it. This woman must not be allowed to be put in a position of authority. She is talking about an outright communist takeover of banking in the United States. That is a death sentence for the global economy, folks. And if you want your credit score to be determined by how socially responsible they deem you are based on their select morality, then go ahead, let her take over. Anyways, I appreciate you guys putting up with me while I rant on this subject. Can you tell this is a passionate subject for me? Okay. I got to read in some of these comments from you guys. Well, this is very bullish, physical silver and gold. Z, I agree. Nothing made me want to just like drain everything into physical silver and gold and Bitcoin and Ethereum like reading this woman's article. I really thought this was like conspiracy theory nonsense until I read her own words. And I was like, oh my God, she's saying this out loud and admitting to it. I couldn't believe it. Sorry to get even more political religious, but this sounds exactly like what my dad warned me about as a kid, is the New World Order and controlling who can buy and sell. You know, Z, I'd love to disagree with you there. I would love to disagree with you. I can't. And again, folks, if I'm treading too political here, please let me know. But this is a finance channel, and you can tell where my philosophy lies. I believe very much in the financial efficiency of allowing individuals to make up their own minds based on their unique situations. That's not just a talking point I use to cover my ass. Every person's individual situation is unique, and we do not need central planners making decisions for everybody, because although it may be the right decision for this subset of the population, it is also the wrong decision for this subset of the population. So let's let each subset make its own decisions based on its situation. You get better efficiency, better allocation of capital, more efficient economy, more productivity. It's better for everyone. What's the Lenin Award? Doesn't sound like something free markets will like. Sheer Wolf, no, it is not. Vladimir Lenin is the founder of the first leader of the Soviet Union, the leader of the Bolshevik rebellion. No, it is not. It is not awarded to those who assuage free market capitalist ideals. I can pretty much guarantee that. Gigi says what he said. Sorry to get it. Okay, thank you, Gigi. Lynn William, if the values of the U.S. dollar drops hard, what do you think will become of existing coins? The meltdown value of a 5-cent coin is worth almost 5 cents. Well, we already have, I have a bag of pennies. Like I have some weird hobbies. I check the date on my coins. Number one, I'm always looking for like that constitutional silver, that pre-64 quarter that might still be out there. But if I see a penny from before 1983 that's made of 95% copper, it's already worth more than 2 cents because it's made out of copper. I have a bag of it's illegal to melt those down for copper right now, but they may lift that embargo eventually someday. So I have a stash of copper pennies, and then I separate my zinc pennies. Not that I don't use that much change anymore anyway. But right now it is illegal to melt down most U.S. coins for their metal value. I don't know if that applies to junk silver. I don't know if it's illegal to melt them down or not. Zeeble Fritz, there you go. Nickels and pre-83 pennies were already worth more than their face value. I didn't know that about nickels, but that makes sense. The Perfectly Normal Beast, because if it's called The Strange Beast, then it would be Hitchhiker's Guide. GNU Engineering, that document read like The Hitchhiker's Guide to Communism, I'm not going to lie. Think Captain Barbossa from Pirates of the Caribbean said it best. Better believe in blank stories, Miss Turner. You're in one. Very good, Jay. I don't know how to pronounce your last name, so I'm just going to call you Jay. I apologize, sir. But that's I love a good movie quote. You best believe in communist stories. You're in one, Miss Turner. Crazy, but it shows how far a government has gone to utopia. 10 years ago, someone would have fired the weirdo. Reminds me of the last months of Louis the 16th. The guy that lost his head. Is that a reference? Was he Marie Antoinette's husband? Was he the king when she was queen? Let him eat cake. Is that one of those? They were talking about a Marie Antoinette reference. Somebody in the government said something about inflation, that it was a high-class problem, prices of things going up. And it was very much a let 'em eat cake kind of moment. Like, no, prices going up is not a high-class problem. When prices go up faster than wages, people's lives get more difficult. And there's a lot of people whose lives are already difficult enough, right? We're not all so lucky. If you're watching this channel, chances are you're at least relatively comfortable in your situation, I hope. Hopefully getting more comfortable, maybe. But it's not the same for everybody. And I've been on the other side of the fence. I mean, I've gone to bed not knowing what I was going to eat the next day before. It sucks. And when stupid muckety-mucks in the government makes sentences like the price of food getting more expensive is a high-class problem, it aggravates me. It's very out of touch. All right. Don't ever lose your perspective. All right. Always keep in mind how the other half lives. Don't be one of those ivory tower a-holes, please, folks. If you're watching this channel, you're probably headed towards bigger and better things in life. You know, you're taking steps to increase your knowledge. You're investing in your future, so you're probably going to be at a better stage at some point in your life. Don't let it get to your head. Don't lose your connection to the world that most of us live in. Stay grounded. Don't ever be that Jeff Christian talking about low-grade people. A-hole that he is. By the way, shout out to Rob Keynes for his interaction with Jeff Christian. I forget what the name of the event was that he was at, but it was the Economic Ninja was he was moderating this debate, And anyways, the clip is out there of Rob Keynes and Jeff Christian's exchange. I highly recommend it. That French king that had the people starved to death, says Mike. Yep, that was Marie Antoinette's husband. They went to the guillotine. Someone from a brokerage firm, I think, reported that Greg Hunter, USA watchdog, that they could find no evidence that Evergrande made that interest payment. That's interesting, Angel Soul. I read something similar about the last payment that they made last week, that there was no evidence that they hadn't been able to confirm it. So that would be a pretty big story if that came out, that they lied about making the payment. Although if you read all the sources in these articles, it says according to sources, according to people familiar who didn't want to be identified. So these are not official company statements. So that's worth pointing out. It could be a big lie. That's a good point, Angel. Zebo Fritz, sir, thank you very much for the super chat, for supporting the channel. I appreciate it. Guys, everybody who's been sending me super chats, I really appreciate that. Thank you very much. Lynn Williams, I was considering an investment in Smith & Wesson. Thanks for that info. I do not own any of those, but I can tell you there may, speaking of Smith & Wesson, I think that's ticker SWC. I think there could be a significant pushback against ESG investments in the not too distant future. If the energy prices keep getting more expensive, if people are really put into any significant hardship because of energy prices over this winter, then they're going to be looking for someone to blame. And that blame lies on the ESG crowd, who has cut off the capital expenditures, cut off the financing system to the traditional energy sources, to natural gas and the coal and the oil, which, whatever your beliefs about climate change and the environment and wanting a cleaner energy future, I agree with a lot of it, but it's not, the technology isn't there yet. Windmills and solar panels can't do it. And letting yourself freeze to death in winter because you wish we had more solar panels is just stupid. It's stupid. And I think there's going to be a lot of pushback against this ESG nonsense. And I think when that happens, companies like Smith & Wesson will do well. But I don't know when that will happen, if that will happen. Again, not everybody thinks like I do. I have to sometimes step outside of my skin and realize I'm an outlier these days. So maybe that never happens. But I can see people getting majorly pissed off this winter when they get some serious energy bills. And they are coming. Which, by the way, plan for that in your monthly expenses coming up in the next few months, folks. Whatever you paid for heating your home last year is going to cost you a lot more this year. If you're in the States, it's probably going to cost you 30 to 40% more to heat your house over the winter than it did last year. If you're in Europe, a lot more. So make sure you have that flexibility. Make sure you have that plan so you don't have to go into high interest debt if you can't make your energy payments. I think people should watch World War I and World War II documentaries on Curiosity Stream to understand what is happening in the economy. I love a good World War II documentary. I'm not so well versed in World War I, but my grandfather fought in World War II, and I used to love to hear him talk. He was a tanker. He served in the 3rd Armored Division in the European theater under General Maurice Rose, who was the highest-ranking Allied officer killed in World War II, second highest-ranking killed in the war. Sorry, he was the highest-ranking officer killed in the European theater, the second highest-ranking killed for the Allies in the war. He was a lead-from-the-front kind of brigadier general. It was always fun to listen to my pops talk about General Patton. He hated Patton. Most of Patton's men hated Patton. My grandfather really hated Patton. Anyways, I got a little sidetracked on the World War II history there. That woman looks Chinese in Kazakhstan, borders China, coincidence. No, it's not coincidence. Kazakhstan is, an Asian country. It's in that part of the world, so that doesn't surprise me. But it was part of the Soviet Union. So, I mean, when they said she was a Kazakh American, yeah, she was Russian. Everybody from that part of the world was Russian in the 1980s. Do you think that future banking is in small, local, decentralized currencies? Local, decentralized currencies. That sounds a little bit like cryptocurrency, but local. I don't know about local currencies. Local currencies, I don't see that being good for anybody, to be honest with you. That sounds like exchange being difficult, right? Like, I could see a barter system coming back. If this government takeover of the banking system really gets bad, I think more people are going to be driven into bartering, which I guess a barter system would kind of resemble small local decentralized currencies. Marshall Topola. But the more power the government takes, the more control they try to take over the financial system, the worse they make it, and the more they drive people into bartering, into cryptocurrencies, into physical precious metals. So I continue to dollar cost average into those things for just that reason, because I just don't have any faith in these people's ability to run the financial system. Certainly not Miss Omarova. Certainly not her. My goodness. Thank you, Jay, again. Hit that like button. I agree, sir. Folks, don't forget to hit that like button while you're here. And if you're new, subscribe to my channel. It really helps me out. Thank you very much. Zebelfritz says, not sure what happened with my super, but I wanted to say that your commentary today about what may happen with banking is one of the most important and needs to be spread. Thank you, Zebelfritz. Again, thank you for the super chat, and thank you for the kind words. Like I said, I got a little more political than I would normally be comfortable with, but I thought that article, when I read this article, folks, this is like 70 some odd pages. But this is a trip inside the mind of the people who are, here, let me shrink me again. This is a journey inside the mind of the people who are making decisions on our behalf right now. So if you want to know what they're thinking, listen to their own words. Don't read the news. Don't go to Fox News or Fox Business. Don't go to CNN or CNBC. Go directly to the source. This is her own words. This is her idea of what the perfect financial system looks like. And it's terrifying. It's absolutely terrifying. So, again, go directly to the source. That's what I had to do when I saw this tweet from Steve Penny. And again, shout out to, who sent this to me? Mr. Brian Zarb. Thank you, sir, for pointing this out to me. Folks, I love when you guys send me these links and these comments. I get ideas for half of my videos from feedback I get from you guys. So besides the algo loving all the comments and everything in YouTube, please keep this stuff coming. This is fantastic material you guys have been sending me, and it makes it easier. It's actually pretty hard some days to come up with a video every day. I spend a lot of time hunting for topics and doing the DD on it. It's a lot more time consuming than it looks, trust me. And again, Zebelfritz, thank you, sir, for the super chat. I appreciate the support. SWBI is Smith & Wesson. Okay, I thought it used to be SWC. I guess they changed it. But I'll look into that one, Lynn. Mark the Stump Grinder. Hey, Jack, sold my hack options. Thanks, you're the man. You know, that's interesting, Mark, that you would say that. By the way, is that Mark that sent me the email the other day? If that is, thank you for your message, sir. That felt great to read that one. I did get a message from a Mark who runs a stump grinding operation. So what are the odds that there are two Marks who are stump grinders following my channel? I don't have that many viewers just yet, that there's probably not two of them. But I almost sold my hack today. It's interesting you should mention that, because as I mentioned before, I am in cash raising mode, and hack is one of those ones that I bought a few months ago based on a story that broke about a large hack in the US. And although I didn't get the move I thought I was going to get in this one, I am up a decent amount. I think 8 or 9% from where I bought it. I have to go back and look. And Mark, I was very close to selling it, to be honest with you, but I didn't just yet. And let's make sure you guys can see what I'm looking at. The reason why I didn't sell hack just yet is because it looks like it might. I want to watch this 66 level, right? It looks like it may have put in a double top here. And if it did put in a double top, then it's heading lower. But I want to give it one more chance to break through 66. All right? So I'll say if it goes below its 50-day moving average after putting in this double top, then I'll probably sell it still at a decent profit from where I bought it at. But if it goes above 66, then I think this larger upward trend is intact. So, it's funny that you should mention that you sold your options in hack. Congratulations. I hope you did well on them. But I'm still holding this one. And I'll let you know if that changes. But I almost pulled the trigger and sold this one today, but I want to give it another chance to break through that 66. Again, congratulations on your gains, sir, and thank you very much for the message that you sent me the other day. It was a very, very good to read that. So, guys, I think it's 4:25. The week is officially over. That's probably a good place to cut it off. I want to thank you guys so much for your time, for your super chats, for supporting the channel, for your ideas, the Twitter messages that you send, the emails that you send, the comments, right? Most of the content from this channel, that's the source of it. It comes from you guys. So please keep that stuff coming. I'd love to read it, and I feel like I'm getting better at this the more I read from you guys. The more ideas I get, it gives me more ideas to research, and it's making me a better investor. Hopefully it's making me a better YouTuber. That's up to you guys to decide that. But thank you very much for all your interaction, for following the channel. Again, welcome to the new people. I'm having a lot of fun doing this, guys. I want to keep doing this, so keep them coming. All right, folks. Have a good weekend, and we will be back next week. In the meantime, live small and dream big.